Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorek. It's Monday, July 8th, 2014, and access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Taking a look at the index with our shortened week last week with the 4th of July, we see that looking at the Dow, up over that 17,000 level, up 216 points for the week, and up 2.97 year-to-date percentage-wise. S&P 500 approaching that 2,000 mark, and we're certainly, as every indication, we're going to get there. Up 24 points for the week, and up year-to-date 7.42% as we see this huge month of June showing us positive numbers as we had another move up in the market. NASDAQ up closed at 44.85, and we see up for the week another 88 points, up 7%, hanging in there just tight. And finally, the Russell 2000 at 1206, up 18 points for the week, and up one of the laggards, up 3.72% for the year to date. And with that thought, let's take a look and see exactly what that means to us as far as what economic announcements we have coming in the next week. Looking at Monday, July 7th, we have basically nothing happening. Looking at Tuesday, we got very little coming as we move into this month of July. But we do have something big coming on Tuesday, and that's the beginning of earnings season as we have last quarter's earnings being reported, which traditionally we look at Alcoa as one of those indicators that tells us it's the beginning of earnings season, and that occurs after the market on July 8th. Looking at Wednesday, the only thing we have of interest is the FOMC minutes, and they're probably not going to hear very much out of those minutes that's going to do much to move the market. Jobless claims take place at 8:30, wholesale trade at 10 o'clock. Jobless claims occur every week, and we'll look at them again this week as we see the numbers having an influence. Looking at last week, of course, we certainly saw the monthly job numbers coming in much stronger than expected, caused that late week surge in the market. And finally, Treasury budget at 2 o'clock, which again, not a whole lot going on this week as far as economic announcements is. The market stands poised, waiting to see exactly what's going to happen with earnings as we look at the quarter that just finished. Let's take a look at the SPX and see what that chart looks like. And as we look at the SPX, we see nothing but an uptrend. Looks like a breakout. We'll see whether there's enough volume to sustain this latest breakout, hugging the top of that Bollinger Band. And when we see that, of course, we know that we're getting a bit extended, and it will have some kind of pullback at some point to this 30-day moving average, at least, potentially the 50-day moving average. So we see that the 200 is below the 50, which is below the 30. The SPX keeps chugging along. Look at them at the last week. We see that we had a nice move up. It was a shortened week, but every single day. Monday was a bit flat, and then Tuesday we had a nice move up. We had another flat day on Wednesday, and then Thursday, urged by that employment report. Thursday, the market showed us what it can do in one day, as we see a couple nice days that week as we look at all new highs out of the SPX. What did the Dow do relative to the SPX? Well, let's take a look at the Dow and see exactly what that looked like. And we see that the Dow also showing us another big move up. Looks like a breakout, getting a bit overextended. What do we see out of these markets? Here we see that every time we have a bit of a pullback, what do we call it? A buying opportunity, a chance to get in. And while the market certainly has done nothing but go up in the last 1 year, the last 2 years, it certainly has been a bull market as far as by definition. That old rule of not fighting the Fed still holds, but remember, at some point along the way, we will have a pullback. When will that happen? Well, we'll have these short-term pullbacks to the 30 and 50-day moving averages. We certainly should get one by the end of summer. But what we will see is that when the Fed changes its mind, which seems to be not in the immediate future, as to how much support is given this overall economy, then we'll see this market pull back to some more correction levels, one might say. All right, let's take a look at the NASDAQ, and we see NASDAQ, oh, look at it, it's almost straight up exponentially at the very top of the Bollinger Bands. Again, getting a bit overextended. At some point, we are going to have a little bit of a pullback as the market does what it does. It goes up, goes sideways, it goes up, a little bit of a pullback, goes up, sideways, moves up again. You can expect that we'll have maybe a little bit of a pullback and go up to new highs until the Fed changes its current philosophy. And when will that happen? Well, you'll know. You'll start to hear some feelings. In the meantime, every pullback seems to be of a buying opportunity. Looking at the Russell 2000, we're now in what we would consider for quite some time, a couple weeks at least, to be in this bullish move out of the Russell, as the 30 is above the 50, which is above the 200, as we hit a breakout, and not an all new high for the current chart, but certainly approaching that high that we had on Tuesday of last week. So Russell 2000 showing great strength. What kind of fear is in our market? Well, let's look at our fear index, the VIX, and see exactly what it tells us as to, there we are down at that 10 level. Again, a bit low, and at some point when we start getting this low, what do we get? We get a move up because the market pulls back and does what markets do, and that's cycle through its normal cycles. All right, well, let's see what happened to our other sectors. We'll take a look at the bond sector with our ETF, and looking at that, we've got TLT, and we see that as the market moved up, so what the bonds do, pulled back, and we see we're actually even below the 30 and the 50-day moving average on bonds. TLT, next bounce up, when will it take place? Well, we're basically kind of sitting on support here. We'll see if we break down. That's supposed to be a straight line, but we're sitting on support. We'll see if we get a little bit of pullback in the market this week. Again, this will be predicated by what we see coming out of earnings as we take a look at the previous quarter, which begins in earnest Tuesday after the market closes with the report from Alcoa. Looking at gold, we see gold sitting back up there. It's showing us a little bit of a move up from those lows that took place in June, and we're seeing that it's holding its own as it's got a new trading range for gold. And what kind of volume did we have during this shortened week and the holidays with the summer doldrums, if you might want to call this doldrums? See, as the spider is moving up, and we see that this breakout on Thursday was on very low volume, but we got to remember also that this volume is summertime volume, which gives us not big moves in volume as the market moves. All right, and finally, let's take a look at oil, and we see oil we're kind of rolled over, pulled back, dropped down through the 30-day moving average, could come down as far as the 50. Watch for higher highs and higher lows for your next entry into oil, which as we get a pullback gives us the next buying opportunity in that. We're in a bull market. Enjoy it, folks. Those of you that are in indexes, enjoy what the indexes have done in the last 2 years. And for those of you that are gold members, stick around. We'll take a look at our stocks to watch, see how they fared in this past week. And so for the rest of you, we'll see you next Monday with Market Forecast, brought to you by Options University. It's Monday, July 7th, 2014. This is Butch Shorak, and we'll see you next week. Thanks for being here.